Gold, real estate, and bonds could all lose to Bitcoin. Next on your 4-Minute Bitcoin. Today's show is from a post by the Daily Hodl staff and brought to you by BitBlockBoom. Saifedean Ammous, author of The Bitcoin Standard, says Bitcoin may take away demand from multiple safe haven assets such as gold, real estate, and bonds. Now, in a recent Salt Talk video, Ammous explained how Bitcoin could emerge as the top store of value asset, stating that he thinks demonetizing gold is a realistic goal and turning gold into an industrial metal. That can happen, so Bitcoin can eat that market. Now, it won't mean gold will go to zero, obviously. It will just become an expensive industrial metal. He continued by saying you have to also remember that a lot more of global markets are essentially just looking for a store of value. They're not looking for investments that yield returns. A lot of people buy homes and they don't really need homes because that beats inflation is why they buy them. And a lot of people invest in all kinds of things, like bonds, for instance. Bitcoin could eat into the market for real estate. It could also eat into the market for bonds. So these things could lose a significant amount of the demand that comes to them because people don't have a solid store of value that they can just use for the base of their portfolio that you don't take risks with. Bitcoin, if it grows into this kind of digital gold, well, it can offer people that. So you can imagine then it will reduce the demand for other markets, and then the sky is the limit. Ammous believes that the apparent vanishing of Bitcoin creators, who's known as Satoshi Nakamoto, well, he thinks that was a good thing for Bitcoin because it adds credence to the decentralized, uncontrollable nature of it, stating that the disappearance and the fact that the person who created Bitcoin left is probably an essential part of what makes Bitcoin work. The fact that there was nobody in charge and the project continued to survive is what makes it extremely tough because it's what makes the monetary policy set in stone. It's what gives the digital value because this is a network that is out of control of anybody. There's nobody out there who can take over this network and change the money supply. So the disappearance of the creator was an important factor in the growth of Bitcoin in a way in which it had become neutral and controlled by nobody. The author says Bitcoin shouldn't be thought of as a big safety net from a bad financial system, but instead as a legitimate, better system, in that we need to stop thinking about Bitcoin in terms of this system is going to collapse and Bitcoin is the only answer to it. We need to instead to think that this is just the better technology. This is just the more advanced system, and it's likely to take over just because a political settlement that is accessible and verifiable for anybody, anywhere around the world at a very low cost, well, it's just a much more powerful proposition than having to go through political institutions every time you want to send and receive money, and to go through political institutions that have a monopoly and that can devalue the currency at any time. Now, I love Saifedean's book, The Bitcoin Standard, and I highly recommend it to anyone who's not read it. So please, find it and take a read. So, what do you think? Do you think Saif is correct and Bitcoin will replace gold? Is that why it's called digital gold? Let me know your thoughts in the comments. As always, and this episode is brought to you by BitBlockBoom, the great Bitcoin conference I host every year in Dallas, Texas, every August. Now, BitBlockBoom is a true Bitcoin event, not a crypto event or an altcoin event. So if you're interested in Bitcoin, please take a look at bitblockboom.com. I hope I get to meet you in Dallas in person at this year's event. I'm Gary Leland, the Bitcoin Boomer, and thanks for joining me on another 4-Minute Bitcoin Show. This is a bitblockboom.com production.